Welcome to Effortless Mortgage. In this video, we'll answer the most common questions about private lenders and private mortgage rates in Ontario. First question is, what is a private lender? A private lender in Ontario is an individual or a company that provides mortgage loans outside of banks and credit unions. They're often more flexible and can be a great option if you need quick approval or don't qualify for a traditional mortgage. Second question is, how do private mortgage rates in Ontario compare? Private mortgage rates in Ontario are higher than what you'd get from a bank, mainly because private lenders take on more risk. Rates usually range from about 6% to 14% for first and second mortgages. And the rates depend on your situation, the risk involved, and your borrower profile. Third question is, when should you consider a private mortgage? You might consider a private mortgage if you've been turned down by a bank, need fast financing, have unique income sources, or your property doesn't fit typical bank lending criteria. Private lenders are also helpful for debt consolidation and short-term needs. The fourth question is, how can you get better private mortgage rates? Working with an experienced mortgage broker is key. Also, having more down payment at least 20% or equity in your home, preparing all your documents in advance, and choosing the right mortgage term can help you qualify for better rates. And are private lenders regulated in Ontario? Yes, private lenders must be licensed and regulated by the Financial Services Regulatory Authority of Ontario, or FSRA for short. This is to make sure borrowers are protected. Next question. What are the risks of using a private mortgage? Private mortgages often come with higher interest rates and shorter terms, which means higher payments. Watch out for hidden fees and always research your lender to avoid any predatory practices. That's why it is best to work with an experienced mortgage broker for advice and guidance. Here's a small scenario for an Ontario borrower. Let's compare a 2-year mortgage for $240,000 at 80% loan-to-value, meaning 20% down payment or equity. A traditional mortgage currently has a 2-year fixed rate of 4.19%, with a typical amortization of 25 years. This means your monthly payment would be about $1,266, but approval usually takes several weeks. On the other hand, private lenders offer faster approvals, often within days, but at a higher rate, around 6.99%. Additionally, private lenders typically charge an upfront lender fee of approximately 2%, which is taken from your mortgage proceeds. The monthly payment on the private mortgage would be roughly $1,445, and you'd pay a lender fee of about $4,800 upfront. This comparison helps illustrate the key trade-offs when choosing between private and traditional mortgage options. Before choosing a private mortgage, here's what you need to consider. Do the math. Compare private mortgage rates and fees with traditional mortgage costs to understand the real expense. Don't forget to factor in lender fees, typically around 2%. Assess your timeline. Private mortgages are ideal for short-term needs, usually 1 to 2 years. Make sure your repayment or refinance plans match this time frame. Review your financial profile, check your credit score and debt-to-income ratio to determine your eligibility and what rates you might qualify for with private lenders. Consult a mortgage broker. Talk to an experienced broker who specializes in private lending to get detailed advice tailored to your unique situation and to navigate your best financing options. Are you ready to explore your mortgage options? Reach out to our Effortless Mortgage team today, and let's figure out solutions and options that fit your situation.